Good evening. This is the Elliott wave update for the S&P 500 for Thursday, December 16th, 2021. Today was basically a reversal of yesterday and not quite as severe, but here's kind of what took place in between. During last night's Globex session, the S&P actually went up and made a new all-time high, and that was at 47. Come on. Let me see that number, 4743.25. So it made a new all-time high, granted only by about 2 3/4 points, but it still made a new all-time high, and it did it in 5 waves up. So what does that present to the ongoing count? Let me start with that. Right now, we continue to look at this whole move off of the December 3rd low. And that December 3rd low was, why is this coming up that way? No, it should be. Yes. On the December 3rd low at 44.92. And why is that sitting down there? I don't know. But at 44.92, we have now been counting this as a minor fifth wave up. And within that minor fifth wave, 5 waves of minute degree, of which this just got moved up to here. This was down here before. And this would have been considered wave 5 of a minute level under the previous count. But it got switched, lowering everything by 1 degree, then minute 1 here, and then an ABC down, minute wave 2, and we're off to the races with yesterday being a perfect third wave. That still is the case. It still was a perfect third wave, doing exactly what we would expect in third wave. But it completed, did a 4, went up, did a 5, and then back. So that again brings us to a point where, okay, what actually happened? Well, it was a new all-time high. So worst case scenario, that was the 5th. And that was it. And we're done. And now we're going to drop. Even though we were looking for, again, we were looking for new all-time highs. So the count would have to shift around, maybe 1, 2, 3. Somehow this would have to end up being a 4 and this being the 5. Don't know exactly how that would work out, but that's what it would have to be if this is going to be considered the end point. Because it is a new high, etc. So here we are. And so, but I'm looking at it similar to the way I looked at this one, just on 1 lesser degree. This could have been all of minor wave 5, but it just didn't fit. We would be looking for new highs. We didn't get them, so it would have to be a failure. That would not have been able to produce that. So that's where this got moved, because this went lower than it should have to produce an additional rally without marking it as a 5. It just stopped and didn't feel like it was going to go any further. So that's why this got moved. This got put as a 2, and off we went. Now we're in another position where it's like, did that complete the whole 5-wave cycle? Or is it just part of minute 3? It certainly is too short to be all of minute 3. So what could it be? Sub-minute 1 of minute 3. That's the bullish count. That's the preferred count right now. For that to stay alive, the market really can't be dropping too much more. And we've already gotten a pretty severe cough going on here. So it really can't. And in fact, we go 1, 2, 3, 4. We've done 5 down. Strike against the count. It's a strike against a bullish count. Because what it tells me is we'll get 3 up and likely get another 5 down. Now, if that occurs, it still has to hold above 45.96 for step 1. But it can't fall below 44.92. And if we could drop as easily as we did today, and we add that another day from current levels, that would put us, let's see, we get that overnight. And then we began to drop from 47.43. We did, let me see how low we got today. Yeah, it was 100 S&P point drop. High to low. If it does that again tomorrow, from wherever we finish this, we're at 45.65. We break that first point. That throws upside under this count to the wind. What will negate it 100% is if it were to drop below 44.92. Upside is off the books at that time. So we have a two-step process here. This could come down, equal that, just like it did here. As long as it didn't break it, I'm expecting more upside. It didn't, we got that upside. Same type of a situation. It's got a couple of negatives working against it because I could count 5 down. And that's on my hourly. 1, 2, 3, 4, 5. And I don't like it. But I'm going to let the market tell me, because it's just been a strange couple of weeks. That's all I can say. You know, to get the reaction we got yesterday from the Fed makes their announcement, everybody loves it. In fact, they just loved it all night long. Until at some point, the Exchequer in the UK came out and said, well, I think we're going to raise rates. Boom. And that's what started it. And here we come in. Our first plan was like, well, let's buy it. We're still going to go up because of yesterday. Who cares about the Exchequer? Somebody did. So tech got taken to the woodshed today. If you were a tech owner, you did not like today. Owner of the stocks, you did not like today. Apple took a bath. Advanced Micro, AMAT, Amazon, go down the list. Facebook, Google, Intuit, Microsoft, Netflix, NVIDIA, PayPal, not so bad. Tesla got knocked off the block. So we're seeing a big shift, but we saw this shift now twice. And the volatility increases because we're now 1 day away from the Friday expiration, the monthly expiration. A lot of things will get rolled out, excuse me, to the following week. So that gives more time for the rally. If you're on long position and you're rolling out a long position into next week's expiration, so be it. But we got that. Plus, we just got a lot of selling, plus. So there's a lot of activity that goes to premium, that goes to volatility, but goes to underlying prices, buying and selling, et cetera. So there's a lot that's going to be pushing these indexes in both directions. The wave count right now continues to allow for an upside. That upside, though, from this level needs to just catch fire and go. So if it only gets up so far, maybe breaks about 40, 45.86, maybe 47.11 again, and fails, not going to be good enough. Maybe good enough for the expiration, but for the count, it won't be that good. We'll have to continue to allow for it, but I'm telling you, this is telling me we may get up a little bit, but eventually it's going to turn over down again. I would think that probably Europe and Asia might just cool to stepping in as buyers right now. So in any case, be prepared, because again, that first break. Now that's the upside, and that's what I'm going to say. That's still the preferred count, because the market's going to tell us a lot more than what it did today to change it yet again. So I have to leave it this way, but I need everybody to be prepared for both sides. Just reviewed the upside. Needs to just pick up and go and start breaking higher versus pick up and go and start breaking lower. So it might get up, like again, this could be an A, a B, and we're just going to do a C, maybe look for again, 46.75 to 46.85 should contain the remainder of any bounce. I'll leave it at that. But from there, if it gets a turn and it starts to go and we break below, 46.42 now, right? Then you're looking for at least for it's got to hold 45.96. Break there, pushes us a lot lower. So that's the upside. Now, what happens if it breaks 45.96? That initial upside move would be negated for now. And very likely, open this up a little bit. Come on. Come on. That. Try to open it up. There you go. All right, so now we have what we have labeled as 3 and 4. Those would be moved again back to the previous position. This I'm not sure what to consider because it's a new all-time high, but the count starts to change in terms of this being, this could be all, this could change, and then that ends up being a 5 wave and being minor 5, and this then becomes all, you know, the highs of the highs of the highs. These are all possibilities. How high of a probability scale do you want to give it is going to depend on what the market does from here. If the market continues to start to break down, you'll have no choice. That is what will be happening. And what we'll be looking for is, again, if it breaks 44.85, well, that just kind of almost seals the deal. And we're counting on our 4-hour 5 waves down. On my 1 hour, I already just did. I'm going to let that develop a little bit more just to give me additional confirmation. But if my 4 hours starts telling me it's a 5 waves down, and then the daily spells 5 waves down, it's not going to be pretty. In fact, I'm going to go over to that daily, because what it averted in the NASDAQ was this sailing through the 50 up and down a couple of times. See, it did it here as well, but now up here, we've gone through the 20 and closed below it, went back above the 20, closed above it, came back down, touched it, went through it, but managed to close above it. Now, here we sit. So it was weakness, maybe not. Strength, maybe not. We don't know yet. Okay, so this is a market in flux. And I'll tell you where I'm leaning, which may have some validity, may have no validity. I am leaning towards the market being done. And that would take this very well laid out cow and just toss it in the trash for right now, because this would have to be changed. This would likely be 1, 2, and there'll probably be a beautiful 3rd wave up to here, and this is be a wave 4, and then we get the 5 up, and that's it. Good night. And that would work. As ugly as it is, whatever. If that's what it's got to be, then that's what it's going to be, because the market's going to tell us. That's the important factor I want to keep saying. The market will tell us. We have to be able to give it the room that it needs for trading, because A, we want to be able to participate in the moves. Okay, so downside, if it breaks below there, you're going to be looking for this. Still going to be playable to the downside, without a doubt. We're just laying now a little bit more foundation. 46.42 brings into focus 45.96. If 46.42 holds, look for it to bounce back up, and keep an eye on your moving averages. They will guide you. They're going to tell you what's happening, because if the market starts to gain strength, breaks the 50, well, the 4 and the 20 are already going to be turning higher, would likely have turned higher. The 4 for sure, the 8 for sure, these are all going to turn as the market gets up to break that 50, then the next up would be the 20. Because the 4 and the 8 are all going to be pointing in that direction already, but that'll tell you the strength. And then you've got to be able to just shift gears if that's what's going to be recalled. Follow the price action, don't get married to any side. Now, downside, break there opens the door for an additional period of acceleration. Because the sellers are just going to blow right through this stuff. that should provide support. The 46.44 to 42 should provide support. In fact, you could probably let it drop to 46.40 and still be okay. New low, but still. A lot of damage will start to kick in if it just goes. And it also will depend on how fast they move it there. If it inches its way down here and one little push goes there and comes back, well, then you got to sit and just remull it. You think about it again. But if it breaks solid and starts heading, then we know that this is where it's going to go. It has some price support, again, within that 41, 40, 42 zone. But then it has a little bit of price support at 46.20, 46.02, a little bit stronger because a couple of points there, but then 45.96. Break there, you're just playing it from the sell side. Count your waves and be looking for it to head down here. All right, so that would be the alternate view. And what's going to confirm it, of course, is the breaks and your moving averages. So right now it's huddled around, no, it's not. Yeah, it is. It's huddled around the 200. Not going too far below it, not going too far above it. It may just hang out there and use 46.60 area as point of control until there's a clearer direction setter. So there's a clearer market that's going to decide. And then we just go along. So we have upside, got to light a fire, got a spark. It's got to get, I think, back above 46.85 to show it has upside intent and not just a small correction with additional downside. So above there, we should probably continue to head higher. I'll break below. First one is 46.43 down to 46.40. And then we're looking at 45.96. And that's where I'm going to leave it. Trade smart, trade according to the price action, try to follow along with it. Use the moving averages. They truly do guide you. They help you. Also, Bollinger Bands, if you're using those, pay attention. Maybe set yourself a 1 deviation, 2 deviations. You never know. It helps to just kind of keep things in alignment as to the severity of what is happening. And what is the market going to move sideways, or is it going to actually resume? So, you know, tools that you know work, use them. Let them guide you. Let the Elliott guide you. Let the Fibonacci guide you. Have a great trading day tomorrow. The next update will be on Sunday, the 19th.